Investors are torn between betting on the imminent collapse of China and banking on the country's long-term potential. I'm joined now by Anthony Bolton, fund manager at Fidelity, which manages $20 billion in Chinese securities. Anthony, thanks very much for joining me. Now, you're one of the bulls on the long-term prospects of China. Going into 2011, how will you be investing your money?
I'm going to continue to focus on the areas that I have since my fund started earlier this year. I think the drivers of growth in China are changing. In the past, it used to be very much exports, manufacturing. China was the low-base manufacturing, or the cheap manufacturing base for the whole world. I think the authorities see that that can't persist into the future, and if you look at the 5-year plan, this is very much part of it, that they're shifting more towards consumption and towards services. So I'm focusing on those areas and high value added manufacturing. And I think areas like in the services like pharmaceuticals, education, in consumptions, the retailing and all the plays on personal spending, I think will benefit.
One focus has been hot money inflows into China. With all the interest coming into the region, are authorities handling it well enough that it can stay even?
I think hot money flows are probably more a problem for Hong Kong than China because of the barriers. But yes, they are. I mean, they tend to put up reserve requirements as one of the ways that they counter these hot flows. But I think a net flow of money from the West into emerging markets like China, it was the feature of this year. I think it's going to be very much the feature of next year as well.
Interest rate rises potentially as well, another theme for 2011. Could that sort of curtail the party? Will that put a lot of pressure on assets in China?
It could, but I think interest rate tends not to be the primary tool the authorities use to control things in China. They generally use reserve requirements and they use quotas. They actually go out and tell the banks, you know, stop lending. So I think that will be their primary source. My general view on interest rate rises is that they don't stop the bull market initially, but eventually, I mean, if they go on for some time and they get too high, they normally do in the West stop the bull market. Although in China, you don't have the sensitivity to interest rates. The consumer loans are not as big as, and mortgages are not as big as they are in the West. So the economy is not quite so sensitive to interest rates.
So you're bull in the long term, but in the short term, are we facing an asset bubble in China, and will it burst in the coming few years?
I think we might be facing a bubble, and I guess all bubbles eventually burst, but I don't know exactly when that will happen. But I think we're in an environment where asset prices could go well above the real underlying value.
Is that the biggest risk for China, or do you see something else happening there that could cause some concern?
I think that's an opportunity, actually, rather than a risk for the moment. On my risks, I'm worried about credit growth. Credit growth last year was 19%, and if you add in off-balance sheets and unofficial lending, it's growing well into 20s, and I think that's unsustainable. So they will have to slow that down. I don't think they'll do anything really dramatic because of the political changes that are coming up in 2012, but we need to watch that carefully. I think some of the social challenges, this change from exports, manufacturing to consumption and services, that will mean people have to change jobs. I think that's a challenge. I think as people become more affluent, that's a challenge. So yes, I'm not saying it's, you know, that there are no risks in China.
Final quick note, inflation, another buzzword as we head into 2011 in China. How big a concern is that? I
think countries like China, in this dual speed world of low growth in the West but higher growth in emerging markets, will have to accept a structurally higher level of inflation than they've had probably in the past. And I think China used to be very deflationary. I think it's now going to be more inflationary. I actually think that inflation, I think they're pretty well focused on inflation. My sort of central case is that it'll probably peak towards the end of the first quarter. So some of the things they've already done this year, by the time they feed through, will start to take the pressure off inflation. But we need to watch things like food prices, which are much less predictable in the short term.
We'll keep an eye on that. Anthony Bolton, thanks very much for joining me.
Thank you.
Anthony Bolton of Fidelity there. I'm Tara Joseph Hoy. This is Reuters.